Welcome to the Daily Business and Finance Show. U.S. elections stir uncertainty in auto sector. McDonald's CosMc concept takes off. Cruise industry sails out of troubled waters. Regional banks face NII pressure into 2024. Bristol's cancer drug combo shows promise. Oil prices fluctuate amid global concerns. Stocks at risk as Fed considers higher for longer. REITs dip without positive catalyst, and crypto-linked stocks lead financial movers. Stay tuned after the short ad break to delve deeper into these headlines. The potential impact of the 2024 U.S. presidential election on the automobile sector, specifically electric vehicle or EV policies, is significant. A change in government could lead to alterations in environmental regulations, trade negotiations, and federal tax incentives for EVs. This could potentially disrupt investments by automakers and their supply chains. S&P Global Mobility has suggested that a Republican-led administration might decrease or even abolish existing EV laws and funding, which would cause manufacturers to reevaluate their strategies. However, it's important to note that any regulatory changes would likely only affect models from 2028 onwards due to legal requirements for advance notice of new standards.
McDonald's is experimenting with a novel restaurant idea, CosMc, in the city of Chicago. This concept is named after a character from McDonaldland during the 1980s. The menu primarily features unique beverages and snacks. The trial location has experienced twice the customer traffic compared to regular McDonald's outlets. Even with capacity challenges, feedback has been largely positive, and there are plans to expand with an additional 10 locations in Texas by the end of this year. Industry analysts suggest that this could pose a potential risk to Starbucks and other coffee chain competitors.
Despite confronting a crisis of titanic proportions, the cruise industry has rebounded from COVID-19, boasting record revenues and increased bookings. Major players including Carnival Corporation, Royal Caribbean Cruises, and Norwegian Cruise Line have witnessed their revenues surpass levels seen before the pandemic. Nevertheless, factors such as geopolitical uncertainties, rising fuel costs, and a potential economic downturn could potentially dampen profits in 2024.
The year gone by presented numerous challenges, including interest rate increases and bank collapses, leaving regional banks in a state of uncertainty as they enter 2024. Despite the industry's anticipation for rate reductions, it is wrestling with a decline in net interest income due to expensive deposits. The early part of 2024 continues this trend of weakness, evidenced by uninspiring Q4 earnings and bleak forecasts. Banks such as Truist Financial, M&T Bank, and Fulton Financial reported mediocre results, while others like Fifth Third Bancorp surpassed projections. In light of macroeconomic instability, numerous banks are allocating more capital to cushion potential losses.
Drugs named Opdivo and Yervoy, produced by Bristol-Myers Squibb, have demonstrated a reduction in the risk of disease progression or death by 79% when compared to chemotherapy in patients with colorectal cancer. The results from the Phase 3 trial are set to be presented at the American Society of Clinical Oncology Gastrointestinal Cancers Symposium.
This week, there was a slight increase in crude oil prices due to worries about China's economy and conflicts in the Middle East. Despite China's slower growth in the fourth quarter, the International Energy Agency anticipates a well-stocked market and a rise in global oil demand. Although tensions continue to exist in Gaza and the Red Sea, they have not significantly affected oil prices. The Department of Energy has bought 3.2 million barrels for the Strategic Petroleum Reserve, maintaining its efforts to replenish inventories following Russia's invasion of Ukraine in 2022.
Despite the relaxation of financial conditions and expected rate reductions, a report from J.P. Morgan cautions about possible threats to specific stocks if the Federal Reserve continues to uphold elevated rates. The report indicates that this scenario could influence equity valuations, especially affecting high-beta, illiquid stocks with low quality or weak balance sheets. Companies such as Victoria's Secret & Company, Harley-Davidson Incorporated, and Bath & Body Works Incorporated are among those that could potentially be at risk.
Real estate investment trusts, also known as REITs, have underperformed for 2 consecutive weeks. Key indices have seen a decline of over 2%. Industrial REIT Prologis has reported disappointing earnings for the fourth quarter. It is anticipated that mortgage REIT AGNC Investment will report similar results. Despite receiving a boost from the deal between Blackstone and Tricon Residential, the residential subsector experienced a drop of 1.64% this week. Both infrastructure and healthcare sectors witnessed steep declines. On the other hand, lodging and resorts saw an increase of 1.41%. Pebblebrook Hotel Trust announced positive results for December while Power REIT suffered a fall of approximately 13%. The biggest gainer was net lease office properties with an impressive increase of around 22%.
The value of Bitcoin decreased by 2.7% this week, which had a significant impact on stocks related to cryptocurrency. On the other hand, traditional financial stocks experienced a minor increase as the earnings season kicked off. The major losers included Marathon Digital and Riot Platforms, both of which are Bitcoin miners, along with HDFC Bank from India. The winners were led by Argentine lender Grupo Financiero Galicia and insurance company Travelers Companies, both surpassing Q4 expectations. Despite receiving a downgrade from Mizuho, PayPal also saw gains. And that's a wrap on the Daily Business and Finance Show. Stay informed, stay invested. Until next time, keep aiming for those financial stars. I'm Montgomery Jones.
And I'm Amalia Dupre. Goodbye for now, until we meet again tomorrow. This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.